I am here with Otto Kobler. Hi, Otto.
Hi, Nadia. How are you?
Otto's the branch manager at Summit Funding and also the senior loan officer there. And we are here to answer the real estate question of the year of 2020 and probably 21, namely to buy or not to buy in this crazy hot sellers market. Buyers are getting frustrated, multiple offers over asking. So Otto, what's your thought on that?
So really, here's the funny thing is, if we look back, we've been in a seller's market really starting back in 2011, and the market has, I mean, it's waxed and waned a little bit, but it's essentially from that period of time right to now. That's like 10 years. We've been in a seller's market. It's, from my perception, it's not going to change. So we have the federal government is pumping trillions of dollars in 2020. Last year was pumping trillions of dollars into the economy to sustain the economy because of COVID. They were doing very specifically about 1.1 trillion into the mortgage market to suppress mortgage rates, to push them down so that more people would have access to money and lower interest rates and help our economy that way. So presently, what we've got going on are conforming interest rates in the mid to low twos. Like, I've done dozens and dozens of loans this year or last year at 2.49%, 30-year fixed rate loans at 2.49%. So that's impelled even a stronger buyer's market, or a stronger buyers into the marketplace. So we've got a seller's market. It's very competitive right now. Now we've got a new administration that's come in. That administration just the other day announced that they're going to pump out another $2 trillion. So we see all of that money last year where it came out. It manifested itself in low interest rates, higher property values, and higher stock values. So we got another 2 trillion coming, and the promise of more trillions behind that. So that's going to do the same thing. It's going to come out the only place it can come out, and that is higher property values, higher stock market, lower interest rates, or low interest rates. They're not looking to lower interest rates beyond where they're at. They want to maintain this number going forward. So you take all of that and then look at what the reality of California is, and we underbuild. We don't build enough housing here to sustain the population that we have. We have a population that generally grows either through people immigrating here or just families growing and all that. So there's not enough room. There's not enough housing. So we're in a sustained market that there's a shortage on. And with these super low interest rates, more people qualify for real estate, for houses. So I'm just going to close the door behind me. Pardon me. Sorry about that. I should have thought of that to start with.
Okay.
So when I look at it, I think, okay, well, what's going to impel interest rate, any changes in that scenario? And I don't think there's anything out there that's going to change that. So now is the time to buy, not waiting for a future dip. And you and I talked a little bit about what happens in a dip. Like if property values drop 10%, well, what happens as interest rates rise? Well, the trade-off is pretty dramatic, that it's much better to grab a hold of an interest rate, a low interest rate right now, even if you think prices are going to come down in the future. And we can go into that a little bit, but a little bit further. But I really just, when you look at that equation, low amount of housing being built in all of California. There's a shortage of housing in every market in the country. And I'm talking about Ohio and Tennessee and Indiana, markets that have generally had excess housing do not have excess housing right now. Texas, got clients who are buying houses in Texas, and it used to be you could go in and pick a house and have the pick of houses. Well, it's not like that anymore. There's an inventory shortage everywhere. So it's not going to change. The best thing is grab a hold of it.
And that's what I'm getting a lot is, hey, Nadia, should I wait? Like, what's better, the lower interest rate or the house prices? I'm like, well, first of all, you don't know what's going to happen to the house prices. You know what's happening now. And right now, interest rates are super low. So, that's what you want to look out for are the monthly payments. And I always recommend, hey, talk to your lender, have them run some numbers on different scenarios. What would happen if interest rates are going to increase by 1% and home prices are going to, go down by 50,000? You're still going to end up with a higher monthly payment. And that's what people really are looking for, is that low monthly payment.
Well, here's the thing too, is with the low monthly payment like you're talking about, that allows you to own and hold on to the property comfortably over a longer period of time. And real estate's really a game of time. So you buy a house today, you hold on to it for 30 years. We've seen this down in San Jose. People bought houses 30, 35 years ago for $100,000, and now they're selling that house for 1.5 million. Well, that's coming here to Sonoma County. We're just delayed from it.
Mhm.
And so buy your house here now, get an affordable mortgage, like you said, a low monthly mortgage payment, and hold on to that for 30 years. And then you'll all of a sudden be crazy wealthy. Like we will see the same thing happen.
Exactly, exactly. And even if you do sell in 10 years, within the 10 years, like you said, you're gonna have comfortable monthly payments. And that's what people really should take advantage of. And I know it can be frustrating right now with multiple offers, but bottom line, there's always a house for everyone. And just, stick it out, try and buy right now.
So, a lot of people look back on the market and they look backwards to the drop off in property values back in 2009, 9 and 10, and then the recovery of prices from that period of time. And that's an anomaly that occurred. All the other times in the past 35 years that property values slowed down or dipped was teeny, teeny, tiny. Like
Yeah.
it was, yeah, in the early 90s, 89, right after the earthquake in 89, we had the economy slowed down and property values dipped 1%, then 2%, then 2%, then 1%, and then they started going up like a rocket ship after that. So any of the other dips that we're going to have and we'll probably have something over the next 30 years, they're likely to be the small ones, not the big ones that we had. But here's the other thing that happened back in 2009 and 10 and 11 is when those property values dropped, buyers came into the market, all cash buyers came into the market in massive amounts. And so if you were a buyer trying to buy it and you had to get a loan, you couldn't buy. It was a very difficult time to buy. So right now is this crazy time where we have, yes, property values are a little higher than they were before, but interest rates are so much lower. I just ran I've got my trusty old fashioned calculator, and some people laugh at me.
It does look pretty old fashioned.
Yeah, it's very old fashioned. So if you got the maximum conforming loan limit today, it would be $707,000 at a 2.49% interest rate, which literally I'm doing dozens of those every month. The monthly payment is $2,789.
Wow.
If you think about it, that's just not that much money. That's like rent. That doesn't take into account taxes and insurance. Of course, that's more, but 2,787. So if that same house was to go down in value 10%, and so like drop 70,000, but the interest rate was to go up back to where they were before COVID, which was like 4%.
Which they will at some point. I mean,
Which they will at some point. The monthly payment then actually went from $2,700 to $3,037. So in that example, housing prices go down 10%, but the interest rate just goes back to where it was before COVID hit, and you'll pay more by $300 a month.
Makes sense.
So buy now.
Exactly. I agree. Well, thank you so much for that insight, Otto. I really appreciate it. And
you bet.
if anyone has any questions, yeah, we're trying to do this more regularly. So if anyone has any questions that we can maybe make a short video on, just let us know.